Hey everyone, Retire on Dividends here. Doing my first not live stream, but interview with none other than Sylvia Jablonski, the CEO and CIO of Defiance. Most of you know her, but I'll give her a chance to give a quick introduction of who she is and what she does, and then we'll go from there.
Yeah, thank you so much. I'm happy to be here with you today. Thanks for having me. I'm Sylvia, and I'm the CEO and CIO of Defiance ETFs. My kind of career has been in ETFs pretty much. So upon graduating school, I worked on a Delta One trading desk where I was trading and working with clients on swaps and different products and ways to get exposure to build their ETFs. And I ended up joining one of my clients at the time was a levered inverse ETF provider called Direction ETFs, the 3X guys. I don't know if you guys know them, but
Yeah.
it was that Direction where I met Matt Belsky, who's the original founder of Defiance. We actually worked together there for a long time, and we're in our second adventure together here at Defiance, along with a couple of other guys, and yeah, super excited to be here.
How long has Defiance been around?
So we've been around since 2018.
Okay.
Yeah, fun fact, the name of the company is named after the movie Defiance. I don't know if you've ever seen that with Daniel Craig and Liv Schreiber about the brave partisans during World War II.
No, I
Very
heard
much,
you say that before, but I never saw it. But
yeah, awesome movie, and
yeah.
Matt Belsky is the grandson of Zeus Belsky. So it's quite a story, and hopefully we're going to honor that name, live up to that Defiant name.
So far, so good, right?
Yeah,
All right.
so far so good. Yeah,
Yeah,
hope so. Hopefully.
I'll get into some fun questions now.
Okay.
So we'll start with the newest fund, SPY T, just came out, maybe like a week ago or so.
Yeah.
I just wanted to get give you a chance. Do you want to talk about that fund and how that compares versus say the QQQYs, and what you think of it?
Yeah, sure. So it's super interesting because when we launched QQQY, IWMY, and JPY, people like they love these funds, right? You and I were talking a little bit off camera about Yield Max, and I think they kind of started this whole large print draw, with the large single stock coupons and dividends that they pay using covered call strategies. And the same trader who actually does the trading for them is the guy who trades for us, and we do it a little bit differently, right? We do put right strategies, so we try to generate income through selling these zero DTE 24-hour long put options. And the thing there is really like high levels of extrinsic value that's paid out monthly. So every day we capture call it like 25 bips or something like that on QQQY as an example, and we distribute that entire amount. Now, so some of our distribution rates look like, I think it's running around in the 40% for the S&P, close to 60 on QQQY. IWMY is sky high, it's like 70% plus. And then the performance of the fund, though, obviously is also kind of total return, right? So you do have NAV decay when the divs get paid out, and then you may gather or lose up or downside performance on the intrinsic value of the index itself. So
Yeah.
why did we launch this one? Well, we realized that with QQQY, IWMY, and JEPY, but our clients and investors love the distribution. And I'd say that 80% of them kind of understand or just or maybe by habit or by knowledge, whatever it might be, to reinvest the dividend, right? You're going to get the most bang for your buck if you take the distribution and invest it back into the fund or back into something else, right?
Yeah.
Whatever you want. If you want to buy a different stock, that's fine, but put the money to work for you. That's how it works best. And what we realized, though, was that there's a huge group of people out there that are like, that feels a
Want my
little bit like,
capital, right?
yeah, or like, I don't want to do any kind of portfolio management in a fund.
Yeah.
And so we were thinking then, well, would people like the idea of having a steady distribution that is still, juicy, 20%,
Yeah.
I would certainly say 20% is juicy for the year. But then we're going to kind of like reinvest some of the options that we get. We're going to use options to stabilize the NAV, so we kind of you sell, you kind of like sell, short term, gather the value from that option. But then we kind of have a longer term call option as well, so that you can you get more upside into the NAV. So the idea here is to just kind of keep the NAV steady and
Yeah.
keep distribution steady. So, JEPY, you're gonna get like 40% distribution, but the NAV, it's gonna end up where it kind of ends up, right? Based on intrinsic value of the index. We don't hedge the downside. It's a little, you have some volatility in the NAV, right? And then, so with SPYT, for those investors who just like want to set it, forget it, don't want to do any portfolio management
Yeah.
whatsoever, that's a better fit.
So SPY T, what they do, right, is I guess it's daily, right? Daily
Yeah,
covered calls.
yeah,
They sell covered calls, I think at the money, and then they buy a call a little further above
further
that.
out.
Is there
Yeah.
how far, like, what are they using to go above? Like, is there a percentage? Is it based on implied volatility at that current day, or what is,
Yeah, it's an active, like it's yeah, I mean it's based on that current day, but it's also kind of an active decision based on the
yeah,
portfolio manager, like what, kind of his sense of where he's kind of potentially get the most juice out of that option. But what it does is it kind of like uncovers the cap on, the cover call, right? Because
yeah,
you kind of like open up the upside for that. So
yeah,
um, yeah, so I think that, we're gonna kind of see what happens and see where the interest takes us and kind of who ends up trading which one. It'll be a good learning experience for us too. So
yeah? It's definitely a good fun. I actually just covered it the other day. I made a quick video. It's definitely interesting, but it's funny when I make these videos now. I'm like, it's like a low yield 20%, where it's not low.
yeah, I know. Yeah, it's like it's basically like treasuries now, right? 5%,
Yeah,
20%, it's one and the same.
exactly.
Yeah,
Yeah,
yeah, no, totally.
no, it looks like a
Totally.
solid
Equities
fund, but
skyrocketed.
exactly. So I heard, well, I see QQQT and
Yeah.
IWMT are also going to follow. Are there any dates that you can reveal on that yet when they're getting released, or?
No, I
Oh,
think, we can launch them anytime, at any time. They're now
oh, okay.
effective. But what we would like to do is just see if people are actually interested in SPYT. We want to kind of get the feedback and get the feedback from your followers and
Yeah, yeah,
investors in funds like these. And if they tell us, this is awesome, we want more, we'll put them out. If not, and they say, no, I like the other way better, we'll leave the other ones out there. So a little bit of a test run here with this ETF.
yeah.
I
I'd
mean, we
say
actually think it's the sweet spot, right? Because I think
it
you're
is.
gonna have lower volatility, you have that steady dividend. It's kind of perfect to like, retire. I mean, the word retire, right, is big for you, but like to sit in a retirement account.
Yeah,
This feels like that right product. Whereas I think you
yeah,
can do some trading around the divs on the other ones, and people, sophisticated traders obviously know how to capitalize on those ETFs in different ways too.
yeah. Definitely. Is there anything else? I know you probably can't answer this, but any other new funds that are, any new and exciting funds that are high yield coming out, or?
Yeah, well, we filed for a bunch of them. And again, it's just going to come down to, we're doing a lot of R&D right now in terms of like what's actually missing and what do people want to see.
Yeah,
But yeah, I mean, we recently filed for 10 ETFs, and some of them are around high income on like a USO, like an oil income type of
yeah.
thing. We had one
I
filed for
like that one.
emerging markets. We have one, yeah, we have one filed for developed markets. We have a gold one filed. So, but I think, what happens is since we came out with our ETFs, like the number of filings in this space has just skyrocketed. So we also don't want to launch
Yeah,
the same, we have to just be careful about what we come out with, but 100%, there's a lot of ideas, they're all kind of filed for now. And I think we'll kind of decide when the time comes what the best next move is.
yeah. I was wondering, is there going to be like a Dow Jones one, like, that sells puts on the Dow Jones or index?
Yeah, so they don't have these 0 DTEs or 1 DTE options yet,
Yeah.
where
Okay.
you can like we could probably do something like SPYT or something like TRES. So we launched TRES too. I don't know if you know about that one, but it's
Yeah.
TRES, and yeah, another similar, kind of like income on top of income play. So I guess you could do something like that, but I think what we're finding initially anyway, and I might be proven completely wrong if everyone kind of flocks over to SPYT, but what we've been hearing and seeing is that a lot of investors really love this 0 DTE, concept. And so I think if we get there, If we have kind of some shorter term options that we can regularly use to generate that type of income, we'll look at it.
So you guys call it zero DTE, but it's one DTE, right?
So this is, so I love this because this was
Yeah.
like hammered all over social media the other day, like who's doing, because I forget, who was it, Roundhill, was it
Round Hill
Roundhill?
doing zero
Yeah, yeah,
DTE.
yeah, yeah. And so here's the thing. It's a technicality, right? Like we
Yeah.
are like 23 hours and 22 hours, 23 hours, something like that. It could be 23:59. It's technically under a day, but I guess, we sell them at the close and then that clock runs overnight. So are we a day? Is it because it's 23 hours? Is it less than? So we're kind of joking around about this because there's no real, I don't know that there's like a real like is 3 hours ODTE or is 23 hours ODTE, right? I mean, you can
Yeah, yeah.
argue like it's three for sure, but there's no real
Zero sounds
definition.
cooler though. So,
Zero sounds cooler.
yeah.
But yeah, I think, I think we'll see. I think we'll see. We're not really saying anything on it because we sort of feel like, and this is great. I'd love to hear the feedback of your audience. Like we just feel like there's no real definition. Like people just kind of like made this up, right?
Yeah, yeah, exactly. Yeah.
So
So
so we
so you
get the zero
close
to D
them.
or no? I mean, let the masses tell us.
Yeah.
But
Yeah. We'll
we're
see.
using options that are expire in less than 24 hours. So
Yeah. Yeah. Let us know in the comments below. What's zero definition of zero DTE? Are
yeah,
you
yeah.
saying like QQQI and them, they cash settle at 359 and the new positions happens at 4 or
Yeah, I mean, so it could happen before too,
yeah.
right? It can happen. So the way that we have it in the perspective, so the way that it's going, right, is that most of these are held and sold within like a 23-hour-ish time frame, right?
Yeah.
We sell at the close, right around the close, and then they're unwound. They're unwound the next day. But in the prospectus, like you can see that we can actually we can go shorter, right? And we can go longer. Like we can, if we don't see an option that we can use on a particular day for some reason, we can use a weekly, right? So far, we've used nearly 1 days, let's call them.
Yeah. IWM, they don't always have daily, right? They have sometimes 2 days.
Oh,
Or,
I think there's been like one occasion, I want to say, it depends on the fund, like IWMY, yes, for sure.
yeah.
There have been, yeah, but for QQQY, I'd have to go back and look, but I think it's been, daily or like the close to close, the 1 day period,
Yeah.
since the fund launched. I think there's like a day or two max that we didn't get that.
Yeah. Okay. All right, so we talked about Roundhill a little.
Yeah,
They came out, obviously, you're probably well aware when new
yeah,
funds come out, they're paying weekly.
yes,
Do you think that's a bad idea? Because I know there was another fund, what was it SoFi? They had WKLY and
yeah,
TJIF. I think they're gone now, right? So, and
yeah,
obviously there must be a reason for that. So
yeah.
either there's less interest or it's an administrative nightmare. Do you have an opinion on that?
Yeah, I think absolutely it's never going to work. No, just kidding. I don't know. I don't know what's going to happen.
I
I'm
agree.
actually very friendly with a lot of people there. We also used to work together at Direction. Some of the guys there that have launched that fund, but
Mhm.
so good vibes everywhere with that. But yeah, I
Yeah.
don't know. I think remains to be seen. What I would worry about with weekly, and I don't know that I'm right, is the decay, right? Like the biggest issue with a lot of these funds and what people talk about is kind of the decay. And obviously you want to look at total return and not
Yeah.
price return, obviously, but if you're paying out like a huge dividend heartily weekly, I don't know, I kind of don't know what the NAV impact is on that. I mean, administratively, surely it's a pain just to pay out monthly is even
Yeah.
cumbersome.
Yeah.
There's several meetings that go on before each dividend gets paid out. And but that's kind of like your own internal thing. So I'm sure they can kind of manage that for themselves. But yeah, I'm actually really curious to start, to see what happens, how it goes.
Yeah. To see how they do. Because I know
Yeah. But
maybe
look, credit to them for picking up on something new, right? I give them full credit, like they did something different, you know,
well,
so.
SoFi did it first, but I guess
They did,
maybe
but you forget about that because it's gone.
yeah,
Totally, they did. I know. I almost forgot. So interestingly enough, like we have a marketing company within our brand too, and we were marketing some of those products, and I had actually forgotten about them, and that's a great little
yeah.
reminder about those two. The two, they're a little different, obviously, but yeah, yeah,
Yeah, I know a lot of people out there, they do care about like the payment schedule and they want to get
yes,
paid weekly. So they're
yeah.
investing in different funds specifically on the pay date, which,
We've also figured that out.
well, I'd
Yeah,
never
that's been a
recommend
new
that, but
thing that we
you know,
figured
because
out. We were like, wait a minute. The same thing happens at the same exact time every single month. Like
yeah,
companies are now, like, you kind of see it, right? Some of the companies are starting to change their div
payment.
dates, right?
Yeah.
To like the
Yeah,
15th,
Yield
and
Max actually
that
moved their
reason,
dates.
you're right. People want them weekly.
Yield Max, you guys in the beginning of the month, Yield Max was,
Or that, oh yeah, we pay in the beginning. We announce
yeah,
on the last business day, we pay. Yeah, yeah.
yeah. And I think Yield Max moved their day closer to your day, and a lot of people were upset with
Right, right.
the space in between. But yeah, so as far as like I think, well, it feels like the QQQY is your biggest fund out of the three.
Yes, the
And
biggest
then I
one. Yep.
think JEPY last time I looked, and then IWMY is right behind them.
Yeah.
How do you feel about how these funds have like came out of the gate? Are they as popular as you thought they'd be? Are they doing better or worse than you thought?
So never in my career have I seen, $500 million come into ETFs in like a 3 or 4 month period. I mean, I want to say that at the 3 month mark, so we launched in like September. So I want to say at the 3 month mark, we were already at like 300 million. I mean, we have funds that have been around and that's considered a highly successful launch. I mean, everybody wants billions of dollars in assets, but the truth is, if you can get a fund to a point where you're getting to that 100 million mark, it's more
Yeah,
than likely profitable for your firm, and it more than likely has staying power, at least in the short term. Things can change, obviously, but so yeah, we were very happy about that. We were thrilled with that. I was really surprised by the amount of just dedication out there, to these different products, and the amount of interest in particularly the retail channel on this stuff. It's
yeah,
it's just been really cool to see, and yeah, it's definitely surprised us.
yeah. I think what it brought to, well, number one, well, Yield Max came out first, right? And they came out with this
Yeah,
covered call strategy, doing options for you,
yeah,
which, that was kind of new. Then what you guys brought is daily options, which, you know, most of us work 9 to 5. We don't have time for this, right? We can't do daily
yeah,
options because we're
exactly,
working. So,
exactly. Yeah, nor do you want to do this, right? I mean,
well,
it's a
that's
headache.
debatable. It is
Let a
fun, but
professional do it,
maybe
and
not every day. Yeah. But
yeah,
yeah, you guys
yeah,
offer something that people can't necessarily do, unless they're
yeah.
retired or don't work. But and also they don't have the tools, to make the best decisions. But I think,
Yeah. And then I think like the other thing too that people don't realize about this is like so this is super interesting too. One thing I learned that I didn't expect is that people would compare us to Qs and NASDAQ, and think that like,
I
oh,
know,
you're
yeah,
you're really underperforming Qs. And we're like, we are, but that wasn't really we're not competing with Qs here, right? This is an alternative income fund. Like if you look at the kind of like the Sharpe ratio, if you look at the stats of this fund, it's arguably kind of like far less volatile for the income that you're receiving. But we're not, we're really unlikely to ever be Qs if you get like type of
yeah,
rallies we've seen in that underlying index, or S&P 500 for that reason. So this isn't for an equity investor who wants exposure to like Nvidia and Tesla, right? It's like not what you're getting here. So that's
yeah.
something that we learned, that it would be perceived as a competitor to Qs.
Well, that's what to me the naysayers, the people that are just negative and don't understand the funds do, right? They just
Yeah,
compare it to say, well, QQQ did this. Well, this is an income fund, right? It's
right.
completely different. We're not trying to compare it to that.
Yeah.
But that brings me to actually another question. Who do you consider your competition? Do you consider Yield Max competition or no, because you have the same sub-advisor, or how does that work?
Yeah, I mean, I definitely think that our assets are up for their grab and vice versa. You know, and you made a good point, just like in terms of like the distribution dates. So I suspect that some people go back and forth between the two firms. They kind of have the single stock market covered, you know, we're more index, right? So we
Yeah.
are differentiated in that way. Like I think we have kind of the diversification argument. They have the, if you're all in on Tesla, here's that, you know, and they have a couple of great ETFs there, obviously, but yeah, so I think you can compare us to, it's hard to, it's also like kind of hard to compare a single name stock to an index too, right? So I think, you know, we kind of throw ourselves in that alt space, you know, that alternative income space, I should say. So maybe like a, you know, like a JEPI, a QILD, like those types of, you know, those types of products I think are more trying to do what we're, you know, it's kind of the same neighborhood, you know, where
Yeah.
we're living.
But your yield is much bigger. You know, the
Yeah,
QYLD is what, 10%, 12% maybe. But
yeah, yeah.
all right. Yeah, so I know, well, like I guess you can't Round Hill maybe, you know, because
Well,
they,
now, yeah,
yeah.
now game on, right?
Curve is more yield
That's
max
true.
competition, I guess. And then
Yeah,
yeah, there's not many others yet, but I'm sure. Oh no, Rex shares came out.
yeah. Rex has some things
Yeah.
now. Yeah, yeah. I
So
mean,
like,
I think arguably too, it's really interesting what's happening in ETFs because for the longest time, like so ETFs, the ETF world has become so saturated. There's so many issuers, there are so many
yeah,
funds have closed, and you know, ours, all the competitors we've been talking about, closed funds, open funds, things like this. But I think what's really cool now is like this is the first year that it feels like innovation is back in ETFs, right? For a long time, it was just like messing around with the same topic in a different way, you know, whatever theme it might be.
yeah,
And now like we see some cool stuff, you know, like crypto ETF, like you can argue that that's been a really great innovation because it just like came out now in an ETF.
yeah, yeah,
Um, these income products, like the, you know, a lot of the covered culture, the single name leverage funds and stuff like that. So it's just been cool to see that ETFs are actually innovating and people are excited about it now. Like you guys out there talking about it on, you know, YouTube and the different social media groups and spaces and things like this. I mean, it's just been, there's just been such an awesome pickup in like enthusiasm for ETFs, which we love. Um,
you definitely
yeah,
changed things for sure. And
yeah.
there is love and there's hate for these funds. I'll tell you that because
Oh, yeah,
yeah,
100%. Believe me, my emails are like, you
yeah.
could, yeah, the duality of emails that I receive on a daily basis are,
Oh, really?
yeah, yeah, of course, of course. But that's, you know, with anything else, right? Like some people will really find the value in these funds and in the dividend and in the way that it works and
Yeah,
understand them, and invest in them, and they're, you know, very happy. And then other people will kind of take the entire distribution, realize the NAV fell, look at price return and be on, you know, so there's different, you know, there's different ways to look at it, of course. And
yeah.
um,
I
yeah,
even I remember you went on CNBC. I think is when the fund first came out.
yeah,
And then once you got off, like they talked about it very
yeah,
negatively. One of the guys called it something ridiculous. I forget what he said.
yeah,
I don't know. Do you know what I'm talking? Is the garbage fund? He said something bad. I'm like, really? Like,
yeah,
but it, but
yeah,
I just thought that was because they're, you know, everyone's jumping into conclusions. They just assume, all right, it hasn't been done before, so it can't be done now, right? Or, you know, it's
right,
gonna
right.
work. They see high yield, they immediately say it's trash or something ridiculous.
Yeah, I mean, and but what I would say though to the naysayers is like we are like we're completely transparent about what we're doing every day. Like you can
Yeah,
see the trades every day, you see what the dividend is, you see where the NAV is, you see the difference between reinvesting and not reinvesting. You know, you can see that we're getting that extrinsic value. You can see that, you know, you're not getting as much on the upside of the NAV. Like there's no, you know, there's nothing in the fund that is kind of hiding from anyone who wants to have a look and decide whether or not they think it's reasonable. So that's one
yeah,
thing I would say. There's no gotcha, right? Like all the trades are there. We
exactly.
disclose the information. So I think, you know, we love that investors love the products, but for the investors who don't, I think they have the information to make the decision, you know, that's best for them in terms of like where they're going to put their next dollar. And we're okay with it. You know, it's going to
Yeah.
be, yeah, good for who it's good for.
So you said all the trades are there. That brings me. Do you guys
Yeah.
don't have to do that, right? You guys don't have to post
No,
your
we
intraday
don't
trade.
have to do anything. Yeah,
Okay.
especially because it's an active fund. It's an actively managed fund. So you don't
Okay.
actually have to
Yeah.
tell people what you're doing, or kind of disclose, like we'll even tell people that, like, we're looking at a 30 delta, like we're sharing what we're doing down to
Yeah.
yeah, so
Because I used to cover all your funds daily, this, the movement, how much they made, extrinsic, intrinsic income.
yeah.
But I do have one question on that aspect. How come it doesn't reflect how much they paid to settle the prior day's put? How come it's always blank? You know what I'm talking about? It never
The
shows like
commissions,
what's that?
you mean like the commission, or?
No, no, how much it like how much they paid to close the put from the previous day. The one that
Yeah,
expires on that current day, it's always blank. Right? Whether it's a
yeah,
win or a
yeah.
loss, it's always blank.
Oh, yeah, yeah, yeah. Yeah, so I think we could probably disclose that information, like if you wanted to see it, but I think that's also partially, you know, I don't know. I think it's because the position is rolling over itself. Like I think we
Yeah.
can get that information from, like, directly from a fund accountant, if anybody, the custodian who's
Yeah.
actually servicing the fund, if anybody wants to see it. But I think, like, for the website, it just made sense for us to actually just show what it's holding, like the treasury position, and then the put itself. That's kind of what people want to see.
Yeah.
Um, and I think that's what we just thought was the best thing to show. But yeah, I mean, the ins and outs of any trade, we're happy to go through. And we've gone through, like, there are a lot of private wealth managers that, to your point, would like to utilize this type of strategy, but they just don't have kind of like the time to just trade daily options. And so they
Yeah.
use us, even though they could very well themselves just do this. They're sort of skilled options traders. And so, like, we go through all the information with them on a daily basis too, so that they can kind of have a better sense of, like, what we're trying to do and risk and whatnot. But yeah, I mean, the information's available if somebody wants it.
Yeah, I always just use like if it went under, I'd get the differential between the current price and the strike price, and I would
Yeah.
say that's how much they paid to close because essentially there's no time value left, right? Because you're
Yeah,
waiting to
there's no time
that.
value. Yeah.
Okay.
Yeah.
So
Yeah.
that's probably what the number is. Anyway, so I
Yeah,
guess
but to your point, it's not like written out, and
yeah, yeah. Okay.
yeah.
So that started, I guess, my fund specific questions. One generic question, which
Okay.
probably I'm the only one wondering about. I noticed both YieldMax and Defiance added this money market fund, FGXXX, instead of
Yeah.
putting money into the treasuries. Is there
Yeah.
a reason why? Is there higher interest? Is it easier, more
Yeah.
liquid, or
Yeah, both,
both?
both.
Okay.
I mean, they're both super, like, treasuries are super liquid too, but yeah, it's just the yield, right? As yields move around, we want to try to get to that like 4 to 5% on cash that we can for now. So yeah, it's just
So that's
that.
offering better yield than the treasuries dating back to
Yeah,
613 or however. Yeah.
yeah. It's been, yeah, and we can go back and forth. We can go back to treasuries too,
Yeah.
if you
Okay.
get a differential there.
All right. Another question. Is there a scenario where you would close out a position and you would not sell a put going into the following day? Maybe
Mm.
there's news coming out the next day, it's not worth the risk, or maybe, I don't know. Obviously, you can't predict what's going to happen, but I'm just wondering, would there ever be a scenario where you're going to take a day off and not sell a put?
We don't, you can kind of, like, never say never, right? And it's an
Yeah.
active fund. If God forbid there was like a, who knows what
COVID.
Armageddon
Yeah.
type of thing, our trader might have to act quickly. But yeah, I mean, there's no reason we should. There's no reason that I can think of that wouldn't happen.
Yeah. Okay.
Yeah,
And I've seen multiple strikes used on some days with your
yeah.
funds. Is that something that you'll do more over time as it grows, or is it just something random that they decide to do last minute?
Yeah, so I think I think that the trader is just trying to, like, optimize the extrinsic value, right? And so I think he'll, on a day-to-day basis, just make that judgment. And
Yeah,
yeah, I mean, arguably, the bigger the fund gets, the more options you need, to,
yeah.
kind of meet the extrinsic value that we're looking for. So it could go either way.
Okay.
Yeah,
And then this kind of goes into the zero DTE conversation. So I guess Roundhill is saying their benefit is they can take advantage, for not selling it at night or as at the close, they can take advantage
yeah,
of after hours, the market going up, right? Um,
yeah,
so if you didn't, well, no, you don't hold the fund directly. So I guess, yeah,
yeah,
you would not benefit either way. So yeah,
yeah,
that,
yeah,
all right. I
yeah.
answered my own question. See that anyway? Have you Have you ever sold like closed out a put so early in the day just because, it was worth it at that point? Or do you typically always,
I think there was one day, I think there was one day where we did it. One day, yeah, yeah. And so that's something that our trader can do.
yeah.
But it's not the strategy of the fund, but yeah, I mean, if you kind of have grabbed all of your premium for the day, then, you know,
Do you have
makes
one trader for each QQQY, one trader for
it's
JEPI?
the same trader. So it's Jay Pestricelli. He's also the trader for all the Yield Max products. So Zega Financial trades.
Is it Jay or is his people?
It's Jay and his people.
Jay, okay. Yeah. I
Yeah.
don't know if he does the actual trades or both.
Yeah, no, I mean, he definitely trades, but he's there's one J and many trades. So if he's
Yeah.
not around, yeah, he's got a huge team now. Actually, it's been growing since all of us have been growing. So
Yeah.
yeah,
Yeah, no, speaking of Jay, he mentioned in I guess plenty of interviews
yeah,
that your funds, they pay out the extrinsic income
yeah,
regardless of the situation. But when I
yeah,
did my some of my calculations, I noticed like if the fund made, I'll say all income,
yeah.
including intrinsic plus extrinsic, if all income was greater, am I muted? This is mute. No.
No, no, no.
All right,
Oh, I
never mind.
not to
That's
me.
a stupid mouse. See? Sorry.
No,
The
no worries.
Yeah. So if all income is greater than extrinsic income, is that
Yeah.
a scenario where you paid more than the extrinsic income?
Um, so, one way or another, ETFs have to pay out 90%
Yeah.
of, so one way or another, it gets paid out. Um, what our goal is and like what our kind of mandate is to pay out all of the extrinsic income that we earn. And so, that's something that we're really sticking to. But like, could you hold some back? Could you push some forward? Like there, you could, and I think I don't know what the scenario would be under which we, kind of did that, but we could do that. I think, again, like the goal would be to like pay it out and then um yeah, I also think with these funds, it'll be really interesting to see what they all kind of like look like in time because some of that income could buffer the NAV too, right?
Yeah.
If you think about that. So we'll kind of see. But yeah, for now we're paying out the extrinsic, and then anything left over, like you could have a return of capital, you could have, higher income payments down the road, whatever it might be. But the income has to get distributed one way or the other.
Yeah. At the fiscal year, right? That's
Yeah, fiscal year. Yeah.
90%. That 90%, that can't count. Like say if you reinvested into the fund, that doesn't count, right? You have to pay out 90%
Yeah,
of
you have
all
to pay.
income. Okay.
Yeah.
Okay. And then one
If
thing
that's
I
your
always
strategy,
wondered,
like I think you could probably have a strategy where you reinvest, but that's not what any of us are doing yet. So
do how is the payment calculated? Is it based on the calendar month or do you go from declaration date to declaration date?
we go from declaration date to declaration date.
Okay,
Yeah.
so I'm right.
So
See,
we
that's
do
how I
it the
calculated
day.
it. So you
Yeah.
have like little bit of time to figure out the numbers when it comes up, I
Yeah.
guess.
Oh, yeah. Yeah. Yeah.
Yeah.
Like a few hours. Yeah.
Wow. Okay.
Yeah. Yeah.
Yeah, because
Yeah. We have like a scheduled call amongst us where we're going through the numbers, the day,
the day
like,
before, right? You guys usually
yeah. And
sometimes you
because
do it the night of. I'm like, what?
no, I was gonna say the night of. It's not even the day before, it's the night of, which I
Yeah.
almost consider the day before because the market's closed and you can't trade on it, right? But yeah, it's usually like we're talking that day and then, it gets announced that night.
So that's a blackout
But you
period
have
for
you
your
have to
staff.
know like what the creation redemptions are. So it's like you kind of know what the amount is the day prior, but then that actual last day before the announcement, like you have creation and redemption activity that could be meaningful. Like there are days where we have huge creates, there are days where we have large redeems and things like that. So like we do have to have like that true up right before it's
Yeah.
announced. Yeah.
And you have the people. So you announce either the night of or the morning of
Yeah.
declaration date. Do you put in a buffer for new people buying in on declaration date to, consider that, right? No,
Yeah. No, there's no buffer. We
no buffer.
just we
Okay.
make a decision on what it is as of the close of that day, and
Yeah.
that's what we pay out, yeah.
But it's how
And we
much you
also
made divided
announce
by
that we're
outstanding.
doing that, right? So,
But
yeah,
it's based on outstanding shares as well, right? As of
yes,
today.
exactly,
Okay.
exactly. And that's kind of the last minute thing that sometimes changes the amount, like, if you get huge creations coming in like 2 minutes before the close, and you have to adjust, right? Because it'll be,
Yeah.
it would be a sizable miscalculation. So it's very, yeah, the day of the announcement is a very, kind of time sensitive day.
And you keep saying creation, so I just want to cover that. So in
Oh,
case people
sure.
don't know, so a creation unit is essentially a batch of outstanding shares every time you need new ones. Can you explain that? How that works?
Yeah, exactly. So, there are, like people like you and I, we trade in the secondary market, trade back and forth, but a lot of times, so there's kind of two things. Like one, we need to, like large amounts of orders come in, and the market maker will create a basket of shares, like, however many units to meet that demand. So it'll be basically a basket created at the NAV. There are also, net asset value. There are also, like large hedge funds and family offices that might not want market risk, and they might want to create at the net asset value of the fund that day. And so then they'll place an order through an authorized participant to create the shares directly. And then, they kind of know that they're getting the NAV for that. And so, yeah, there's two ways. There's like the primary market, which is the creation and redemption function with authorized participants, where you can buy and sell shares at a minimum creation unit at the net asset value. And then there's a secondary market, obviously, which is just what we do, right? Buying
Yeah.
and selling. Yeah.
Okay. Yeah. No, thank you for explaining that.
Yeah,
Um,
sure.
so IWMY. Um,
Yeah.
I guess the answer is they pay extrinsic, but I noticed like they had a bad month the past 2 months, and
Yeah.
their all income was not good, right?
Yeah.
But they still paid out a big chunk. Is it simply because they're paying out extrinsic income, or is that the fund just because of the implied? I guess it's always going to have a higher yield. You want to keep it at a higher yield above the others.
Yeah, no, so it's definitely it is from the extrinsic value that was gained in the fund. So we're not, so essentially like that, the amount of extrinsic value is actually higher than you would think it is
Yeah.
for that fund. And
Oh
so
yeah,
yeah,
yeah, because
that's
that's a small
where
cap stock,
it's
so
a
it's
small
a little
cap.
more volatile.
Yeah,
Yeah,
yeah. And so that's why it's been able to kind of pay these huge rates. But yeah, as you know, I mean, small caps are more volatile, right? So
yeah. Okay.
like the
Yeah. So
funds, if you look at the extrinsic value for our funds around the holiday season, for example, like the trades were getting a lot less juice because there was no volatility, there's no activity.
yeah,
So yeah, so like small caps kind of inherently has that
yeah. I was
volatility.
looking, but is there
Yeah,
ever like, say they get burnt again this month, right? Which last time I
yeah,
checked, I think they were doing pretty good, but say they
yeah,
get
they're
burnt,
doing, yeah, yeah, they're doing well.
is it possible that they pay less than the extrinsic income just because it's just been taking a beating? Like the NAV's been getting beat so bad, you're going to pay a little less, or is it always extrinsic? We
They
don't care.
have to pay it out. They
Have
have
to
to,
pay it
that's the
out.
man,
Okay.
yeah, that's our mandate. Like, I think if we
Yeah.
ever didn't do that, it would be, I
That's not
think,
in the prospectus though, right?
um,
I saw.
yeah, I think, well, the prospectus is a little bit like, you talk about the monthly dividend that you're going to pay out and things like this, but I don't think you have to sort of specify specifically like what the difference between intrinsic, extrinsic,
Yeah.
uh, value, how much of that will be paid out, which the idea is to pay out the income that we have on a monthly basis.
Yeah.
But yeah, I mean, we have decided that we are going to pay out the extrinsic value that we earn. Like,
Yeah.
that's something that we've decided as a kind of like policy to running the ETFs.
And you strive for 0.25% daily, right?
We do, yeah, we do on QQQY.
Oh, not all of them. Well,
No, no, no.
JETs, I guess. Yeah.
That, yeah, on QQQY.
Yeah.
And that's because that was the first one, that was that was kind of the one that had been the most back tested, and you could kind of, on the back test that we had available to run based on, kind of how long those one DTE, zero DTE options were out, we saw that like on average you're getting 25 bips. And so that's what we sought out to get, that like we would try to get that 62 point, per year distribution. It
Yeah.
could be more or less, obviously, but that's what we strive for.
Do people confuse your Jeppy with the other Jeppy all the time? Is the other Jeppy mad that you named it Jeppy?
Yeah, yeah, there's definitely some interesting stuff we could talk about with that, but
Yeah.
no, they don't confuse us, but
Yeah.
we've heard about it.
Yeah. Now they're
Heard
Jep
about
I.
the commentary about it.
Yeah. They were always Jeppy. I think now they're Jep I and you're Jeppy. So
Yeah,
you kind of kicked them
I
off a
know.
little.
It might.
I think I have one
They're
more
just fine though.
question.
They have a massive fund and
Oh
they're
yeah.
doing.
Yeah, they have the low yield though, right?
Yeah,
So my strategy with your fund is
yeah,
well, to me, I'd buy on ex dividend date
yeah,
and I buy into your fund if it drops after ex dividend date, consecutively, I'll keep buying. And then once it
yeah,
starts, I guess, making money, making premium successfully, then I stop. So that's my
yeah,
strategy. I don't know what you think about that. Because to me, I'm I'm technically getting into the fund and then I'm waiting as till
yeah,
it builds it up and then it pays me out the distribution. Then I do
yeah.
the same thing again. So I don't know what your thoughts on that strategy are. Is
Yeah, that's I would say that's a lot of what we hear, and the volume in the funds and the activity that we see is in line with that. So
Yeah. Okay. So you see
yeah,
that like you could tell like
yeah,
people just
yeah. I think a lot of people should like to trade it that way. Yeah.
does that hurt your fund at all or no? If they're
It's really interesting, and I think like for me again, because of my background of working at a place that has like such big daily moves, like we see a fund move 20 to 30 million in a day,
yeah,
because of people selling in and out of it. That for us, it's not like it. It's a product, and like we hope people find the best way to use it for themselves, whether it's to like hold it forever and take the dividend and reinvest it, or just trade around the dividend. Like we want to provide a cool product out there, and we're glad that people have found their secret sauce for making it work best for them. So it doesn't matter to us how people are using it, if it's as long as we're kind of like running it well and efficiently, and they're able to do that.
exactly. Okay. So
Yeah,
I know it's different for you guys. I just thought of another question. For Yield Max, when people sell out of their fund, like a lot of people, they have to
yeah,
close out positions. But I
yeah.
assume since yours is daily, if people
Yeah,
sell,
you don't really have to.
you don't
Yeah,
have to, right? Because it's just,
no, it just
you
kind of
can
rolls
wait till
into
the
the
end of the
next
day to
day.
fix it, right?
Yeah, it makes it a
Okay.
little bit easier to manage, I think, because yeah, you're just cash settling and then you start your new day.
Because even if tons of people sell midday, it doesn't matter,
Yeah,
right? You
doesn't
can just,
matter.
okay.
No, doesn't matter.
I was just wondering about that. All right. Yeah, no,
Uh,
that's all the questions I have, but I don't know.
okay.
Do you have any questions for me and or the community in
Yeah, I
general?
would love to know. I would love to know like the feedback that you get on these funds, and in general, like do you ever hear that people prefer covered call versus put right? Do you ever hear that people prefer single name versus index? Or I'd love to hear, kind of what kind of intel you get about like what are your investors liking about it, or wishing that was different about it?
Well, right now, I think people love the index over the individual fund. Uh,
Yeah, yeah,
and certainly like Tesla is helping that argument, right? Because that's an example of what can happen, when an
yeah,
underlying does not perform as you hope.
yeah,
So, but then obviously there's Coney, MST,
yeah, yeah. That
they're blowing
makes
up.
that
So,
work.
but people
Yeah,
always they look at the bad one, right? But I could
yeah.
tell you people always would rather choose the index. So
Okay.
that's why they love your funds. Because I did a comparison video one time. I compared you and YieldMax. And
Yeah,
obviously that was a plus on your side. And a lot of people that is
yeah,
that's why they say they buy into your fund over YieldMax or more into your fund over YieldMax. So I could tell you,
yeah.
I would say more people definitely like the index over the individual.
And do you think that people like we kind of talked about this before, so it seems that people do care about the date, right? But
Yeah.
do you think they really care about the date? Like does it matter if the distribution date is, if we have one fund distributing on the 10th, the 20th, and the 30th, like, is that preferable to having them all on the same day for some reason? Is it just the extra, what feels like an extra stream of cash, even though it's the same amount? Like, do you get any?
I don't, I honestly, I don't know. To me, it's a budget
Yeah.
problem, right?
Yeah, I don't know either. I don't know. We don't know either on that one.
But
Does
I
it
would
matter?
say, yeah, there's people that will buy because of the payment date. Uh,
Yeah,
so if I was to start a fund today,
you pick a
I,
different date.
I would consider choosing a different date than
Yeah,
Defiance
of
and Yield
course.
Max
Yeah,
because I
yeah,
can't compete with them. So I'm going to choose what I'm going to have against them is I pay in the third week. I think the third
yeah,
week is like one that's slow, I believe. So that
yeah.
is, a factor because especially, well, I don't know why people that aren't retired care as much because it's not a big deal, but I could see, okay,
Right.
if you're retired and you're terrible with money and you want money coming in all the time, sure.
Yeah,
But
you want to coming in more often.
yeah, so but that's why they brought out the weekly, I guess. But again,
Yeah,
I don't know.
yeah,
But yeah, that's people do care.
yeah, yeah. Cool, cool. And do you ever get, we talked a little bit about like what we're launching. Do you think that, you know, like, do you yourself have appetite for more, gold,
Yeah.
oil,
No,
you know,
honestly, like
emerging, developed?
I do like Spy T. I do
Yeah,
like that fund. And I'm gonna be honest, I like the Round Hill Fund kind of how it, they're what they're doing. Because I like the
yeah,
overnight exposure of it and everything. Because so those type of fun. Because I'm like a lot of people like me. Yield Max came out. I went too much into Tesla, right? And you're paying the price. So
right.
as I'm looking into every single fund, I'm noticing, and I do love the QQQYs of the world too. But I
Yeah,
just have to keep to the strategy I spoke of earlier, and and it'll work out fine. But
yeah,
but those you always have to like reinvest into. Um,
yeah, yeah,
which
you do.
and I wanted to ask you this too. Sorry to backpedal, but are you? I don't know if you're allowed to say this. What if you were investing in QQQY? What percentage would you reinvest versus say use as income if you're living off your funds?
I mean, I could, I mean, I could tell you I'd probably reinvest the whole thing because I'm not necessarily living off of income investing right now. But I think if I wanted to take a little bit of income, I'd probably do like 90-10. But I have to tell you, the average person that I speak to, kind of savvy traders like such as yourself that know how to work these funds, they're going like 80-20. They're taking 20, they're reinvesting 80.
Yeah. Okay.
That's what I hear the
Yeah.
most.
No, I
Um,
appreciate that. But
yeah,
yeah, to your question though, maybe like doing what you're doing on QQQY on an
yeah,
index that's a little more volatile than even IWMY, right? Or IWM.
yeah, yeah,
So that
yeah.
would that would be something interesting for sure because it's still
That's
an
a good one.
index, so it's still diversified, but it's a little more risky. You know what
Get
I
a
mean?
little more
Yeah,
juice. Yeah, a little more
exactly.
juice and volatility. Yeah.
Yeah. So something like that would be interesting.
Okay.
But
Yeah. Good to know. Good to know.
yeah.
We've got the whole list out there, so it's good to get the feedback on it.
Yeah, well, I don't know if you'll read comments, but I'll ask, the
I
people also
will. I will.
also leave it in the comments.
Please go easy on us.
Yeah, exactly. Yeah. Well, I don't get that many. In the beginning, I got a lot of bad ones, but surprisingly, I don't get too many bad ones.
Yeah.
So, but that's,
Hopefully that stays true after today.
yeah,
Just kidding. No, I mean, like all joking aside, I hope it's useful, for your listeners to hear a little bit more about the products. I
yeah,
think,
definitely.
yeah, and I
What
think like we as an ETF issuer, like our goal is to get information out as much as possible, and it's hard to do that. So we really appreciate these, opportunities.
before you go, would you be
Yeah.
interested in, not saying I know how to do this, but
Yeah.
interesting in doing this via live stream and I could take questions from like YouTube?
Yeah, I've done it. I've
You've
done
done it?
it.
Okay. Yeah.
Yeah, yeah.
I don't
So
know if
interesting.
Zoom can
There's
handle.
a there's a group in like Korea is big on this because Korean investors love these ETFs and they love leverage ETFs. They have some kind of setup. They do it on SteamYard, I think it's called, or something like that.
Oh, yeah, it says it's not compatible with MacBook. I don't know if there's a way around it. So Zoom doesn't.
Oh, yeah, I'm not too familiar with the technology on it, to be honest,
Okay.
but I've done
But no, I do
Q&As.
know StreamYard, yeah,
But
but
it's also like, there's two ways, like, it's been one where like the person actually asks the question. And then the other way is that the host is just reading the questions, like, so-and-so is typing me now this question,
oh, okay. Or
Stocks
I
with
know there's a way to add you on
StockTwits does
YouTube.
that. I don't know if you know anybody from there, but they do a bunch of those things. Like, we've done things with them before.
Who's that?
Um, StockTwits.
Oh, okay,
I don't know
yeah,
if you know the group, but they do stuff like that where they'll do like they'll do like a Twitter
yeah.
yeah. I mean, like X
Oh,
Spaces.
Spaces, yeah,
Yeah.
yeah. I think. Or do you have a YouTube? Because there's a way to do it on YouTube too. But no.
I mean, I have YouTube. I have logged into other people's YouTube things, but usually, even when it's YouTube, usually they're doing something else. Like, usually they're Zooming with me or they're doing something else. And then it goes to their channel.
No. All right. If
I
I
have
figure it out, I'll
no
let you
clue, to
know.
be honest. I can ask my marketing guy though. He's very tech savvy with all these things.
Okay. Yeah, I didn't know if I guess Zoom doesn't do it, but either way,
Yeah.
um, I'll reach out if I ever figure this out, or let me know. But I appreciate your time today.
Yeah,
Again,
no, of course. I'm happy to do it anytime,
you know,
anytime.
I'm
If you
honored.
ever
Obviously,
want help getting anybody on, let me know. I've been in this ETF world for a long time. I know those round hill guys and all these people, so happy
no.
to, if you want anybody to
All
come
right.
on,
I appreciate that. Thank you
I
very
guess this
much.
world is so easy now to just like get to people, right? But
Yeah.
if it
Small
helps.
world, huh?
Yeah, yeah, I
And
know.
there's a Clip. Do you know the Clip guy, the crane shares guy?
Yeah,
Yeah.
yeah, yep.
Another good ETF. Forgot about that
I
one.
know, yeah.
But
No, there's some good ones out there for sure.
yep. All right. Thanks again, Sylvia.
Okay,
Really
thank you.
appreciate it.
Nice to meet you. Maybe I'll
You
see you
too.
around, see if I recognize you in person this summer.
Oh yeah, that's true. I'll be
Yeah.
jogging. Yeah. All
You're
right.
what?
I'll be jogging. That's where you'll see me running because I always that's
I do the Spring Lake Boardwalk, or you do the,
well no I that's where my normal like when I jog from home I go over there over the bridge,
yeah, okay.
Ascot Bridge. Yeah. So
Oh,
but no,
nice,
yeah, I do
nice.
races too. I actually have a half marathon coming up in two
Oh,
weeks
cool.
in Asbury, but
Oh, nice.
I'm in trouble. I didn't train enough.
It's
But
all
yeah.
right.
All right.
Always
I'll
walk.
talk. Exactly.
All
All right. I'll talk to you soon.
right, bye. Thank you.